Hey everyone, me Kevin here. The market's getting a little red, a little dirty, a little dark, a little sad, not very happy. That's why we got this music playing. Oh my gosh, folks. Oh man. Okay, so yeah, the market is doing a little bit of a pullback here, and let's go ahead and take. Let's actually just get right into this and look at the sticks here and take a look at some of the damage that's happening right here. So we got SOS selling off here. We had a large sell-off that almost potentially just ended about 3 minutes ago. So we're still very close to this potential bottom here 4 minutes ago now. But it looks like at about 2:47, actually that is 3 minutes ago, we potentially hit this bottom here. But we've had a pretty substantial kind of drop here just in the last 30 minutes. I've been watching this. We've got SOS down 12%. Tilray and a lot of the marijuana companies are selling off today. Tilray, Agora down 10, 11, 12% here. We got SPACs getting hit hard. We got API getting hit down 10%. It was heading back to 70, and now it's heading back to the 50s. We've got SunPower, OGI, QuantumScape, Shift, a lot of SPACs here, Gores, the Matterport, a lot of, look at this, 9, 8%, a lot of red, a lot of pain right here, just all of a sudden out of nowhere. Like we're having an okay day during the market open. We're kind of like, things are stable, it's looking good, and all of a sudden, boom. Yeah, wow, wee wow. Oh man. So yeah, wow. So look at this, AMC down 8%, ChargePoint down again. ChargePoint has just been straight selling off. Let's go to the day view here. It is. I mean, it's making this U shape that Unity did. Unity did this kind of U shape as well, where it just literally went back to November's pricing, and you could see it recovered a little bit. But I mean, this U shape we had over here just eradicated everything that has happened since November. Boom, eradicated, right? And we've seen a recovery, obviously, over the last week and a half-ish, roughly, week and a half. We've even seen Unity come up again, over 107 now. It was in the 80s for a period of time. And, now we've got Unity down just 1.5%. It's actually not so bad. Of course, AT&T is under 30 because why would it ever stay over 30? Pinterest, though. Pinterest was up 3% at what point today? It's up 3%. And just literally in this last, I don't know what happened at 2 o'clock Eastern time. I think people are just honestly getting nervous about Jerome. That might be what's happening here. We'll look at the yield chart in a moment, but I don't think that's going to be the indicator here. We had a decent market this morning. Things were doing well. Churchill was up like 14% at one point. It was great. It broke out of the box. And then, of course, what did it do? It went right back into its box like a little dog, nervous little dog. And look at it bounce off our line so consistently. I don't know. Like, these lines are scary. Here it actually broke through the line a little bit, but it's coming back. But anyway, wow. Yeah, big shift here. So why? Why is this happening? What's potentially happening? My suspicion is this has to do with Jerome Powell. And that last time Jerome Powell spoke on an interview, people were expecting him to say, everything's going to be fine. We're going to just buy some more bonds instead of just buying $120 billion worth of bonds every month with our big old money printer. You know what? Let's just print more money. Or let's implement some yield curve controls where basically we buy longer term bonds and we force yields down. And none of that came. Instead, the last interview the Fed gave, Jerome Powell's kind of like, well, it looks like things are going as expected. And it's kind of like, okay, Jerome, we know you want 2.5% inflation, to eventually get to your target of 2% by overshooting it a little bit. But bro, help us out, man. Help a brother out over here. And Jerome's like, no, we're good. I had nothing else to say. Market's doing fine. And meanwhile, the market was like imploding while he was giving that interview. And it's quite possible that we could be building in a lot of negativity right now in anticipation that Mr. J. Powell with the money printer tomorrow when he speaks, which we will be live streaming it. Mark your calendar for 2:30 p.m. Eastern Time, 11:30 a.m. Pacific Time. We will be live to cover Jerome Powell. Mark your calendar for that. But it would not shock me to see the stock market sell off today into tomorrow morning until Jerome speaks. And depending on what Jerome says, the market could be more pissed off or it could be happy again. I don't think quadruple witching day is doing that. Quadruple witching day can increase volume, but sentiment tends to drive price. Now, it's good if you have a stock that's pumping and it's high volume. That's great. We spent quite a while talking about, we've been talking about, for example, like Voyager Digital over the last few weeks, ever since my interview with the CEO over here. I think right now with the volume we're seeing here, though, it's very, very low volume. Super low volume for this stock, and in my opinion at least, which doesn't give me enough. I don't know. It doesn't make me want to get in on a day it's up 12% on such low volume. That means sometimes it's a good thing because it means you don't have a lot of sellers, but sometimes it can also mean that that's going to be potentially short-lived. Who knows? We'll see. I think it's a good company, but I am still comparing them to the eToro SPAC, for example. We got Celsius, BlockFi might be going public. We'll see what happens. It'll be interesting. So Churchill Capital, 4.4%. Far cry from what obviously we had earlier in the day here. But let's go to all stocks here. We've got Moderna about 5%. So Moderna's actually, it's somewhat holding up. It ran a lot more, but it's holding up. Roblox, where is it? Here it is. Also holding up at 75. That's going to be an increase for the day. I mean, they opened in the 73s. So it looks to me like Roblox is going to be bouncing here. It is possible, yeah, I see this comment here, that after hours might be harsh. Oh, sorry, I didn't have the screen there, but you were able to hear it. It is possible that the after hours is going to be a little rough. And part of that is really just, I mean, who knows? But I just wouldn't be shocked if people are like, you know what? We got some tendies over the last week and a half, and it's mostly the suits, right? The institutional investors, in my opinion. We got some tendies. Let's park some money on the side. Let's have some more cash on the side. So that way, if Jerome Powell crashes the market tomorrow, we can go shopping again. That's a possibility. I mean, we'll see. We are seeing a little bit of a rebound right now. Let's zoom into the chart here a little bit. Get a little bit of rebound happening here at Roblox, but there was also here, within the last 20 minutes. Let's see how some of the losers are doing, if we've got any rebounding happening over here. Not really. Not really. See, API, lows of the days. BNGO, another very popular momentum stock. Almost lows of the days, though trying to recover. Matterport, like why would Matterport be down 8%? Did they announce lower sales? Did they, announce that somebody's getting fired? Did they do anything to indicate that their share price should go down 8.5%? No. It's simply SPAC and Jerome's talking tomorrow. See you later. I'll be back. Maybe. Right? And that's the oddity of the market that we're in right now is you do have a lot of this belief of let's trade around Powell. Let's get our money out if we think he's going to be negative and rebuy later. Oftentimes in the past, we've seen a lot of get your money in because Jerome's going to be bullish. But that last interview he gave really screwed us over there. The last interview really led the market to think, hey, this Jerome guy, he's not only here to prop the stock market. He has another job, which is kind of disappointing to think about because I, in some sense, kind of enjoyed that we were all able to print tendies because, well, Jerome was doing the printing for us. But hey, you know what? You can't have everything. So now the goal is, can we hold on to something? So yeah, okay. Let's also look at the 10-year and see what's going on at the 10-year. We have these suspicions about the yield and Jerome. Wait a minute. Hold on. They're talking about
saying and plan. And to your point, the market's rallied big time. Hey, this Bank of America survey out this morning. 43% of these fund managers said that 2% yield on a 10-year will trigger a 10% correction, and at 2.5%, bonds are more attractive than stocks. Do you agree with that?
So I disagree with that fundamentally because I think that stocks can move higher as long as yields move slowly upward. Stocks and yields can move together as long as it's orderly and not disorderly like we saw back in February when there was an almost unsuccessful bond auction of the 7-year. So if you move...
My sidekick.
It's not an absolute level. You can move higher here. We will move higher here. The bond market's telling you that in yields. So we shouldn't be
Here we go. Come on.
about
Push it. Find the dip. Find the dip.
all those volatile days in the bond market, which may affect tech more than the value stocks. You should use those days to build position in the companies that are really very strong, have earnings, are growing their revenues and growing their earnings. Those are the days to buy tech.
So buy tech, make the volatility your friend. Buckle up. Don't be afraid. Don't blink. Elisa, that's why we love you. Thank you very much. Really do appreciate it. You walked us through some really important things, and I do think tomorrow is going to be very consequential. By the way, speaking of tomorrow, you can tune in right here, Fox Business, 2 p.m. Eastern. We're going to take the Fed decision live. You want to watch me and my special guest.
No.
In the meantime, I'm handing it over.
Watch me. Watch you. Oh, man. Okay. Wow. So let's get on over here into the terminal here. Let's see what's going on. Okay. All right. Let's hop on over. So we got the 10. Let's see. 10-year. Okay. Oh, I'm going to put myself up. 10-year. I promise this is just black coffee. Don't worry. Everything is fine. Everything is completely under control. What do we got over here? Oh, interesting. Yeah, so this is kind of the movement that we saw this morning. Let's zoom into this. Let's go into the day here. This will give us a little bit more guidance. Okay, so here's the day. So we saw this spike this morning. But I'm sorry, this was the spike before the market opened. The market opened right around here. And the market was pretty stable. But when we had this spike right here, the market definitely started reacting, and we started seeing a lot of a pullback on some of the higher valuation, the higher multiple companies. We definitely saw a pullback there. Interestingly, we had a little bit of what almost appears to be like a flash crash here in the bond yield. We had a very good auction, a very successful auction that took place right around here. And then right after that, the rates jump back now to almost all-time highs. Nah, not all-time highs here. 1.62, which if I go back to the month, we've been at 1.63 before. I want to say, yeah, here. See, we've been at 1.63 before in this area here. We are presently at 1.6197, so basically 1.62. Wow, okay. Let's, hold on. This is an argument we've heard. Let's listen to this for a second.
Or better. Okay, Ray, I'm kind of with you, but that's kind of broad. Specifically, what stuff? Well, Dalio believes Asian emerging markets will outperform mature, developed reserve currency countries. To our floor show traders, methinks, guys, he means the U.S. when he says mature and developed countries. But Tom, Dalio said to buy higher returning non-debt investment assets, and he calls them stuff. What stuff are you buying right now that fits into that category?
Well, Liz, I agree with Mr. Dalio. It makes less sense to own bonds here. But on the equity side, I prefer pockets of the U.S. market versus China for a few reasons. China has aging demographics due to the one China policy from 1979 to 2015. They're going to look more like Japan moving forward.
Whoa.
We have a dynamic population. We've got the millennials now are bigger than.
If this guy disappears, we know why.
Formation. China
not going to be happy.
We've done more stimulus, 2.8 trillion this year alone. They're pulling back on stimulus. They're going to have a tightening environment towards the end of the year. We're just going to be having liftoff. So looking at
he's comparing China to Japan. Wow. I don't know. I mean, China's been kicking our butt in terms of growth. And they got rid of the one child policy, which I know, not to be confused with the one China policy, which has to do with, countries. But they got rid of that. Now, I obviously know there could be a demographic lag, but
you're actually going to get a bid in bonds, interestingly enough, and in high-yielding equities that yield more than the 10-year. We've talked about utilities and staples in recent weeks on your show. They're all up now, 5 to 10% plus. We think big pharma is next. They yield double the 10-year yield. We like Pfizer, Novartis, and Merck. And not only do they have high yields between 3.5% to 4.5%, they're trading at 13 times earnings versus the S&P at 22 times earnings. We like that bargain, Liz.
And all the big names are higher in pharma land. Scott Bauer talk to me about what you see as, in Ray Dalio's words, stuff that actually gives you a much better return.
Yeah, if you haven't heard about that, because I see some comments here, China for a very long period of time, I want to say like 20 years or something like that, had a one-child policy. If you had a boy, you were done. And if you had a girl in certain circumstances, or I think you could apply or something like that, I really got to brush up on that. Maybe if you had a girl, you might be able to have a second child.
Really like, even with the little bit of run up that we've had over the last week and a half, I love the NASDAQ space, the QQQ, the triple Qs. That's where I would put my money, because you're really looking at the entire sector as opposed to just an individual stock or two.
Just Tesla. Yeah, okay. Let's go back to the sticks here and see for a moment. Now, keep in mind, when we have these sorts of corrections and pullbacks, especially in some of the more stretchy potential valuation stocks or momentum stocks that might sell off, or low earning stocks, like let's see what ARK's doing right now. ARK K right now is down almost 3%ish here. Bounced off the bottom there, but yeah, when you look at these, keep in mind you're buying into the future, and you're not buying, like, you know what I think is so funny about Tesla? Maybe we'll talk about this, but probably not right now. But what's so crazy about Tesla is, and the electric vehicle makers, is everybody keeps talking about like 2024, 25, 2030. Nobody's really going beyond that. The fact of the matter is, by 2035, it is estimated that only 13% of vehicles on the road will actually be electric. 13% by 2035. That's it. It's the current estimate. So we'll see. We shall see. So okay, let's look at the sticks here. So in other words, it's going to be through like 2050 that this EV transition is. This EV transition is going to be, it's so huge, and we're just at the beginning of it. I think that's what a lot of folks don't see. And who knows? I don't have to be right. It's just my opinion. We talk about this kind of stuff, by the way, in our course member live streams regularly. But I personally believe that we are, especially in the EV, we are so, people see the stock price having gone like up, and they see like what when they zoom into that, they see this, they kind of picture this like exponential rise in the stock price. But I think what they're not realizing is, if we're like right here, this is really just the beginning of like a massive run for these companies. So it's the potential here is absolutely tremendous. I think you could probably be overweight EV, but like have too much of it. But and I don't know. I'm pretty bullish. So yeah, I don't think you want to bet against energy and sustainable energy. Let's put it that way. Okay, so it looks like we've got a little bit of a rebound here. Yeah, all ICE cars will get banned by 2035. That and keep in mind, one, you can have ambitious goals, but two, it's not like they're gonna take all the gas cars off the road. It's just that maybe certain companies or countries won't allow you to buy one anymore. There's still gonna be a big used car market. Cars have like a 12-year lifespan, right? A lot of cars stay in circulation for 12 years. And some more, obviously. I'm not saying you keep a car 12 years. I'm just saying the car's lifespan can oftentimes be 12 years. That's like 2008s, 2009s right now. There are older cars obviously available as well. But anyway. Okay. Let's see. Okay. So we got Roblox recovering here after this dip. We got the dip recovery that just occurred here within the last 20 minutes. We got Roblox popping up again off this dip bottom. We got CCIV moving back up again, also coming off that dip bottom. Got GoPro up today. Nice. Okay, GoPro up a little bit. Starbucks up. Got GoPro up almost 4% here. Ubiquity. Man, this is such a good company. This is such an underappreciated company too. But that maybe I shouldn't say it's an underappreciated. I mean, the stock has just gone nuts over the last year. Really, really incredible. But also very, very, very great company in my opinion. I mean, look, before the pandemic, there's somewhere around 189. It hasn't even gone like that crazy. But Ubiquity is another one. Keep an eye on Ubiquity. Yeah. Okay, what do we got here? Intel 1.45%, Alphabet. Gilead, Pinterest, Apple, Micro, all these guys around 1 to 2% here. But really the big losses are in the momentum stocks right here in cannabis. Momentum and cannabis, these guys are the ones just getting wrecked today. Absolutely wrecked. And look at this, very good food company down 5%. Why? Why would a food company be down like this? Why is Beyond Meat, for example, down 6% today? These are some big numbers here. Look at that. Tesla, 4%. Big numbers, big swings, big pain. Sometimes opportunities to buy. I mean, look at this. We got down to, if we go to the minute here. Okay, so we got down to about 671. We're about 678 right now. So we've also somewhat attempted to recover from that bottom of the market move there. FTCV. Yeah, we were talking about this one a lot in the course member stream this morning. We were actually really talking it up this morning. That's funny. Jeez, yeah, let's see. The course member live stream would have started around here-ish. But, oh gosh, it's been a long day. I don't know. It just feels like the days, I don't know. It's been long. But anyway, yeah, wow, up 35%. So doing very, very well here. And that's eToro, and that's also pulling up some of the other crypto-related stocks. So definitely seeing some movements there. Yeah. And whoever said very good food company is anti-recovery stock like Piton, I agree with that. You know, I think the freezer food aisle, the vaccine stocks, the home exercise stocks, you're going to have a little bit of pushback initially as we transition back to a reopened economy. But that doesn't necessarily have to be a bad thing. There could be opportunities to keep nibbling and keep buying and build your portfolio. All right. Okay, let's take a quick peek. Let's see if I can. Okay, let's jump on over here. See what they're talking about on closing bell.
Countries that are unhappy with their encroachment on their sovereignty simply because they don't want to offend the U.S. government and our taxpayers. So that is a really big issue in America. That many of our software elites have a very different view on how you should support the country that has supported us than say we do at Palantir and I do personally.
Why do you think that is? I mean, please call out some company names if you want to, but even if you don't, what is the motivation not to?
There's a long answer. I think the short answer is that some of them just don't have the sense God gave a goat. And they confuse having a high IQ with being sensible. But in any case, the longer answer would be something like, I think there's just a not an understanding of the historical reality of tech. We get away in those of us who are entrepreneurs for looking weird and living our own lives and not being particularly conformist because people in America see that we're creating value for them. The Silicon Valley of the first generation was building things that Americans understood would help them. If you're sitting on your perch in Silicon Valley and you're only creating value for yourself, monetizing the natural resources of your fellow Americans and others in the form of monetizing their data and providing no value to them, except for disrupting the businesses that people work at, you're going to find that your level of trust, it goes really down really far quickly. And I don't think this is something you can kind of IQ your way out of, which is, I think, essentially one of the problems in Silicon Valley. They just think that they're so smart that they can smart their way out of this. But it's just so obvious.
Who are the worst offenders?
Well, they shift. I mean, I don't know if it's helpful. I think
it's interesting they edited this. Like, they didn't do this interview live. They're doing a lot of cutting.
By the way, I'm hopeful there at some point could be some reform because now this is something that really most people are very, very aware of. And by the way, it's a reason why a lot of us, as I mentioned, I believe we were the first company to leave the Valley. When we left the Valley, it was looked at as something completely crazily ridiculous. Who could leave the Valley? Now, lots of people are leaving the Valley. And part of the reason they're leaving the Valley is because the brand of the Valley is not good. And it's not good because they can't answer simple questions. What does your software do to help somebody? And the answer will be, I give a lot of money to philanthropy. Well, I'm all in favor of philanthropy, but there has to be a more direct answer. What does your business do? Or maybe there should be a more direct answer. Our company does nothing to help humanity, and we're okay with that. But there's so in any case, I think that there's a rolling set of offenders. I think the rolling set of offenders will probably change over time, not for the right reasons, but simply because it just can't go on like this.
to what extent do you blame them personally? Because, for example, their motivation is just profit maximization without any other consideration.
Yeah, they probably had to cut this guy a lot just because, I mean, maybe he revealed some stuff or whatever. Oh, it'd be so interesting to interview him. I would love to.
Have every right.
Palantir, such a mysterious box.
They are.
I don't dispute anyone's right to work within the context of the law, and I very much believe these things should be regulated so that people can have, work within the context of the law, and it is true that it's so. But if you are on the cutting edge, just to take the very simple example of that, our myopic perch, helping the Western world stay as strong and become stronger in the future, and so that the West structurally wins the battles of both the software battles, but also the narrative battle of what it means to organize a society where there's wealth provision, education, civil liberties are protected, and we can have open discourse. If, in fact, you are profit maximizing in your country, and that country is protecting you, you have a duty to protect the country. So, I love academic.
He's really making the argument for Palantir here. Hey, the country is good for us. Now we're going to protect the country by, well, big dataing us.
to diverge from their actual economic interest and do good. And that's a really, really important debate. But in the context of we are the global winners of X, and we are partly the global winners because we are in a country, the answer cannot be we do not support that country. And that would be my first baseline. And then after that, we can have a more.
Okay, we're going to go ahead and pause just on his interview for a moment here. Let's go ahead and jump back to the sticks here. Let's see what we got going on in the sticks. So we do have a recovery here in this crazy madness that we had in just the last 20 minutes in many stocks. Not all of them selling off as sharply, but certainly if you're a SPAC, you got hurt today. If you're a Nano Dimension, smaller company, you got hurt today. What's Microvision doing? Imagine lumping them into the group here as well. Yep. Microvision down 4%, Funko down 4%, GameStop down 5%. Not nearly as bad as the madness that we had seen. I mean, GameStop went down to 172 while we were watching it. Canadian Solar's down. Lordstown's down. Lordstown just getting absolutely wrecked, especially after that Hindenburg piece they had coming out on them. I mean, they have just been straight down with bad news here. Woo! Ay. We've got Blink Charging down substantially. AMC 7%. Desktop. See, and the problem is, this is one of the reasons I haven't been buying so recently, is because we got to keep some money. We got to start trying to build up money again, because if we get another spike in the yield curve, and this could entirely happen. Watch next week this happens, okay? Rather than seeing 6% yields, we're gonna have the same thing happen that happened when we went from 1.2 to 1.5, and then from 1.5 to 1.6. We could see a potential spike lead to a larger sell-off again next week, as people are like, oh my gosh, the yield just hit 1.8. Oh, it's the end of the world, which is just a total bullcrap. But yeah, it's entirely possible here. So we want to be careful of that. And this is one of the reasons we want to be, want to have our margin paid down low. We want to have money ready to go, whether that's via credit line or margin. Or, generally I don't advise having a lot of cash, unless you're about to pay off a credit line or something like that. Yeah, I mean, this could entirely worsen here, which is just interesting based on the latest increases and decreases we've seen in the yield curve. It looks like Alex Karp, both co-founders, right? Alex Karp is still talking on CNBC. Let's go ahead and listen for a moment here to what Fox has to say about SPACs. Looks like eToro.
Also
maybe
interesting about this is that Robinhood, as you know, the app for trading for no fee trading, has exploded in user growth. Has exploded. We reported that recently because of the sort of whole GameStop frenzy, which is still going on. It's also exploded because of, let's face it, people are trading on its platform cryptocurrencies. So here's what we know. Robinhood is weighing an IPO, as we've been reporting. It's kind of on a soft hold. But here's what I hear is going on inside the company. They are weighing whether to change somewhat their business model. Something to show that Robinhood is not just the home for quick trading and gamification of Wall Street. They're looking to do something that suggests that Robinhood, and push the notion among investors that Robinhood could be used for long-term investing, for people putting together portfolios of stock, for people to be their own money managers.
That'll be a big shift.
Close to the company, that they're looking to make this either some sort of a change to the app, the sort of interface of the app with consumers, maybe a PR campaign, but something to show that they are beyond the gamification of Wall Street, which is what they've been getting hammered on amid the whole GameStop frenzy, including during those congressional hearings. You saw that Vlad Tenev, the CEO of Robinhood, he was front and center answering questions from Maxine Waters, the chair of the House Financial Services Committee, just on that topic. So that's what they're planning. So it's going to be really interesting to see if this unfolds. Obviously, they don't want to blow up what's working. They are making a ton of money. They're getting a ton of user growth. They are poised to go public when they want. They have to go through some regulatory issues. As we reported, it's being slow-walked. But clearly, if they're looking to make tweaks to the business model, they are looking to do that in the context of going public and being able to explain to regulators, this is just not a gambling shop. This is a place where you can do long-term investing. Again, Liz, we don't have any set plans for this. This is what I'm hearing from my sources close to the company.
Yeah, kind of like an M1 Finance portfolio management.
We should point out that Robinhood had no comment, but did not deny anything I've said right now. I ran this entire story by them, bullet by bullet, and they're clearly looking at it, whether they go through with it and mess with something that's working, or maybe they go through with it because they see the regulation that's coming, so they need to tweak their business model if they're going public. We shall see. Time will tell. Back to you, Lizzie, and enjoy the convention, by the way.
Okay, yeah, I'm there. Concrete, cement, aggregate,
that's like more of
gravel.
Is that more of a mafia convention?
What? I have no idea what they're saying. So I'm just going to go to the sticks and not worry about it. But I will say that is very interesting. If we get Robinhood coming out with some new features to almost kind of try to like rebrand a little bit after the craziness, that could be that could be big. That could be something that really helps the stock. I saw a comment that maybe if Robinhood IPOs, it'll be a meme stock and it'll just get trolled. I think potentially for a stock that would just be coming out on the market, that would be a mistake to think that we have that much power to punish Robinhood, so to speak. It was different when GameStop was 130% short. Your power gets amplified as a retail investor, but ordinarily, I just see myself. I see a lot of suits diving in on a Robinhood IPO. We'll see, but that's interesting. It'll also be fascinating to see what kind of potential changes we might see within the app. Look at oh my gosh, what happened here? Oh, this is the day. Okay, there we go. Yeah, we are getting a really nice big candlestick over here at FTCV. We did a little bit of an analysis on this one this morning. It looked like a better deal to me than Voyager. And I'm still doing research on this, but we were talking about this morning how, eToro, relative for user growth and market cap, looks like a better deal than Voy. But, I've still got to do some more comparison between the two. So Volkswagen is 8%. They are down from about 14%. They had a nice, almost 14% run earlier in the day. We've kind of just seen them dump here. It's funny, I'm getting out of nowhere, just because Volkswagen had an event yesterday. Out of nowhere, I'm getting all these comments on my Tesla video about how Volkswagen's going to take over the world. And I'm like, what? No. They're projecting 1/4 of the battery production that Tesla is for 2030. It's not even close. I don't know. Okay, Pinterest is back up over 1%. So nice little rebound there off the bottom. That's very good. Because we did have some serious, we still have some serious pain over here, but it's getting better. I think there was a moment Shift was down 9%. It was nuts. Just ugh, what a day. Yeah, bizarre market too here, just on a Tuesday. Like, why? Flat open, and then this bizarreness here. Let's see if we can get the Bloomberg terminal or the Bloomberg TV up. See if they've got any interviews for us. Sometimes they do. All right, we'll let that ad load. Let's see what else. So SOS leading declines here. Some also down pretty substantially though. Cannabis down 5 to 6%. Looking for those opportunities too to really go in and swoop in and buy something. So Tesla back to 680. So really bounced off that 671 nicely. Okay, let's see what they're mentioning over here.
Face-to-face in April says a lot. It does indeed, Sherry. Meanwhile, of course, the whole market is, including emerging market investors, are looking at what the Federal Reserve is going to be doing tomorrow. And there's lots of talk of inflation fears here in the United States, but there are real inflation fears and real action from central banks elsewhere, right, in the G20.
Yeah, so it's always a very important day when it's Fed policy day, but there will be another central bank that we'll be watching very closely as well, and that's the Bank of Brazil, because they're expected to be the first G20 nation to actually hike rates this year. And now they're expected to go from a record low of 2% and hike by 50 basis points. This after saying very recently that they were going to stay at record lows. Inflation, an issue, it continues to rise. We're talking above that 3.75% target. And this graphic's just showing how Brazil has spent so much money in stimulating their economy, more than 8% of GDP, topping many other even developed economies like France and Italy. So
lots of stimulus. Okay. Let's look at the top news on the terminal while we stand by for some other info to come down the pike. We've got about 35 minutes to go until the market close. Okay, let's see here. Bond yields back up. So here's the market wrap. Let's listen to this. Hold on. I want to chug this coffee here. Hold on. What are they saying here?
111 million doses have been administered. The U.S. is still recording at least 55,000 new COVID cases and at least 1,300 virus-related deaths each day. According to the TSA, at least 1 million people.
1,500. There was a period of time those were records, right? Oh my gosh, more than 1,000 people have died. And it got pretty ridiculous there. But let's focus on the suits news here. So the U.S. stocks turned mostly lower as yields on benchmark treasuries edged higher. There's that relation again. It's so weird. It's hit or miss. The relation between bond and stock prices is here one day. It's gone the next. It's very... Oops, sorry about that. Somebody was saying they're curious about the VIX, and then I pushed a button, and sorry, I disappeared. So let's look at the VIX here for a moment. And so the question somebody had on the VIX is, we're actually the rip. Yeah, so here's the VIX. Let's go to the 3-day on the VIX. Yeah, there he is, and there he isn't. I don't know. Sorry. So anyway, look at this. We've got the volatility index was actually higher. This is so weird. The volatility index was higher yesterday than it is today. Now we've had a little bit of a spike here. Look at this little micro spike that we've had here. But this is nothing. Go out to 1 year, to last year, where this is like at the moon, right? You can't even notice the VIX over here. It's so low. And that tells you that maybe you don't necessarily have that massive fear in the broad market right now, but you do have stocks certainly reacting here to at least what's going on in the bond market, which to me is just such a stupid connection and correlation that it's just something you want to hold through, have the right amount of cash on the side to minimize your margin. Don't go deep into margin, right? You want to have your margin available and something available to go shopping with when the market tips down. Now, generally, there were some comments about this, about keeping cash. Generally, I don't keep any cash. Like, I would rather put money into like an S&P 500 index fund. And then when the market falls, sell out of that and move into some of my high conviction names, a la Tesla, Wayfair, EXPI, right? These are all stocks we bought pretty low, and they've had nice rebounds here. Let's listen in here for a moment.
Potential rival to Robinhood will debut on the public market soon. Israeli trading platform eToro will go public via $10.4 billion SPAC, backed by banking entrepreneur Betsy Cohen. eToro, which is already available in dozens of countries, plans to start providing stock trading services in the U.S. this year. The company offering zero commission trading, but unlike most popular trading platforms, eToro does not make money by selling trading data to hedge funds. Earlier today, Betsy Cohen joined CNBC, discussed eToro's business model. Listen.
This is a year in which eToro added 5 million new registrants to its list, topping 20 million.
She's reading this.
Which is a significant increase and shows the acceleration of growth and acceptance of the product in the marketplace. As you've seen with other companies like Robinhood and Stripe and some of the others, valuations can grow quickly because the businesses are growing quickly.
eToro, Mike, going public,
good line.
Starting to expand business on Robinhood's turf. How do you see that matchup?
Robinhood's turf.
Fast. I don't necessarily see it as this really scarce resource for, younger people trading stocks and crypto. It seems like everyone is kind of feasting on a pretty strong market here. Zero commissions, it kind of grows on its own. It seems in the numbers that they had this great trajectory in terms of revenues overseas without being in the U.S. market, more than 100% revenue growth last year, without a lot of profitability, but still kind of cash flow positive. What's fascinating about eToro is, in addition to having the zero commission access to crypto and stocks and other trading instruments, and in addition to going public by way of a SPAC, it also has this social investing angle on it where you can essentially just plug into somebody else's trading strategy and automatically copy it. I don't know how much that's necessarily going to take off, but it formalizes a lot of this, kind of we're on the same team and we're going to all run in a herd at certain ideas, and you can kind of surf from one or many other kind of lead traders to another. So that's an interesting wrinkle versus what Robinhood offers.
It also has spread betting, which is a way that a lot of Europeans actually invest in stocks anyway in certain countries, because then you don't have to pay tax on the gains in the same way that you can't offset your gambling losses against other capital gains. Now, that doesn't really apply in the US, where gambling wins are taxable, but the spread betting ability is interesting if that can be applied into sort of sports area as well, and whether we start to think of one of these companies as not just retail trading, but also sports betting. Long way from that, but it's a slightly different platform.
Well, it's interesting because, people have made the case that if you look at Robinhood's screen on the app for options trading, it essentially just looks exactly like FanDuel. There's just not a lot of difference. It gives you kind of the payoff amounts and all the rest of it. So it's functionally on the back end not a very different thing. And by the way, the fact that they don't sell order flow in the same way, because it's not allowed in most of their markets, they're big in Europe for the most part, revenue-wise. It doesn't really mean that they're that the customers get all the benefit. It means they keep the spread. Somebody earns the spread, whether it's a wholesale market maker or it's the the introducing broker itself.
Either way, unsurprisingly, good first day for eToro. Yeah. Much more on the markets as we approach the close. There is the Dow for you, down 0.3%, 100 points or so. The low of the session was about 25, 30 minutes ago. It was down 175 points. So we're just off that low at the moment. As we had to break.
So, interesting. I'm curious, very, very curious about eToro. We talked about this one a good chunk this morning. The valuation for relative to some of the others actually did not seem so bad. It seemed pretty good. It's a fascinating one because, this is really going to be the introduction to seeing Coinbase come on the market and, maybe a BlockFi, Gemini, Celsius, right? There's so many of these products. Like, for example, BlockFi, they're paying up to $250 just to acquire you as a customer right now. If you go to metkevin.com/BF, you sign up for cryptocurrency, you get the interest that they pay you over there. They'll pay you up to $250 for coming over there. And these companies are just trying to claw customers like crazy. Let me see if I can log into mine. These companies are spending fortunes just to acquire customers. Yeah, it's kind of like what Weeble's done. But you have to say, Weeble nailed the timing. because of the Robinhood transition we saw. We definitely saw a tick up in what's it called? Signups at like Webull, E-Trade, and of just really any company. Public had a big tick up in signups after January 28th. Just so weird. I'll always remember it as my birthday. But look at this for example here. This is why these things are just getting so popular. Look, I mean, this is my BlockFi, and I've got, whatever, 246K in crypto here. But look, they're paying me $496 in interest, and they pay this out regularly, like per month. They pay you this interest, and it's kind of incredible because the rates you're getting on just having your Bitcoin. I mean, it's like your Bitcoin sitting somewhere doing nothing, or it's sitting at potentially like a BlockFi, and you're getting paid interest for doing that. Now, a lot of companies are doing this right now. This was particularly BlockFi here. Again, metkevin.com/BF. But, this whole crypto space has some really big potential. And eToro does market itself as a, cryptocurrency broker. So right now, marijuana leading the losses, followed by CLII. This one's just been getting beat up for a while, I feel like. Let's zoom out. Yeah, wow. Look at CLII. So CLII was one that I was not super excited about. And it ran up insanely fast to $24. And it's literally just been a deflating balloon ever since. I mean, it's trying to get some attention here over the last couple of weeks because of the overselling that we've seen. But yeah, I mean, now look, Matterport at 1548. I mean, I like Matterport with a 1 and a 5 in the front, or less, honestly. Like 1 and less than 5. Oh my gosh, it's dirt cheap. API recovering. Look at this nice recovery off the bounce we got here. Very nice. Good recovery off the bounce. Let's listen to what they're covering here for a moment.
A former BlackRock exec is speaking out about the flood of ESG messaging on Wall Street, saying the financial world is greenwashing the public with deadly distraction. He'll join us next to discuss.
Hey, Dad.
What is it? ESG, environmental social governance, right? Basically, sustainability. Okay, that's an interesting argument, what you just said, though. So we'll have to see where they go with that one. Let's see what Fox is covering here. We've got about 24 minutes left in the market. All right, let's listen to this.
And how it could get you confidently to walk back into the office you left a year ago. Larry, welcome. Beyond keeping people 6 feet apart, what does space management mean?
Yeah, absolutely. Thank you again so much for having me. Honestly, space management is really just about there's multiple sides to it, but really it's about getting the people to kind of come back in whatever is most flexible for them and how they will feel most comfortable. We just did a survey recently where 2/3 of people were saying basically they're still worried about COVID and they're still worried about going back. And people have a little bit of skepticism and they want to know that their company's got their back. So right now it is all about how do we keep people safe and what can we do? They still want to go back. It's just probably more of an average of 3 days a week, which is what the data and our customers are telling us.
Okay, so I want you to articulate what it is you actually do. And you launched a beta version of this. And of all companies and entities, the Golden State Warriors tried it out. Tell me what the feedback was and what exactly could you do for them and other beta testing companies?
Yeah, absolutely. So there's kind of 2 parts to it. I would look at it. There's the part while we're still in COVID, and then there's the part going to be afterwards when there's less of like a health concern and more about the flexibility. So right now, it's all about capacity management, making sure you don't have too many people inside an office. There's regulation.
All right. I don't know that we care so much about office management and returning back to the office here. Although, look, it is important, right? Getting businesses back to the office. Although it can also increase costs too. That was one of the big benefits, I feel like, of the pandemic, if we can say there were benefits to the pandemic. Is really just being able to reduce costs substantially at some of the corporations. I mean, operating expenses are in the toilet, which is wonderful for long-run company profitability. And I mean, there were a lot of companies that had a lot of layoffs, and my heart goes out for the people without jobs. But potentially, I mean, my guess is these companies, they're just not going to hire back the same amount of people as they had before. So, in a lot of cases, you don't need as many people as you thought you needed as a company. Maybe you don't need people in the office every single day. Maybe you can just do a lot of work over Zoom. Maybe people don't want to be micromanaged in an office anymore. I certainly can't stand micromanagement. Like, tell me what you want, and then leave me alone until I finish it. I might have a little bit too jaded of an attitude, though. It's probably not good for listening to your boss. Listen to your boss. It's a good thing if you're working for a boss. If you're your own boss, well, then you got to figure out how you want to work yourself. But anyway, big recovery here. Just here was our sell-off, just lows of the day, and we might even end up rallying into the close if these kind of movements continue here. Tesla also trying to trend back up. So, I mean, what a bizarro day. Let's quickly look and see, was it yields that ticked back down? Here's the 10-year. I mean, not really. I feel like the market just freaked out. I mean, let's go to the day view here. Yeah, okay, maybe, yeah. Yeah, actually, what a crazy correlation. Right now we're correlated again. I should have like you know how they have those signs that you hang on the dishwasher that's like, oh, it's clean or dirty? We should have like a sign that's hanging from like right here, and it's like correlated or not correlated, because the bond and stock market are so temperamental. They don't know when they want to pay attention to each other. Am I right in the idea that dividend? Yeah, a lot of people ask me about dividend investments. I'm just not a big fan of dividend investing, because even if you put it in a retirement account, if you're young, you're missing out on growth. Growth is what we want. So now you can have some dividend paying stocks like Apple, for example, and still get a mix of growth, but then you get a small dividend. So it's a tough balance. Oh, here's that ESG argument. Let's listen to that.
Around a whole bunch of ideas around social purpose and business will do the right thing all by itself, all voluntarily, all stakeholder capitalism. The more you mislead the public into believing that free markets will correct themselves and that we don't need government regulation. And that comes directly at the expense of the youngest and the poorest in society.
So, I just want to stop you, because we did reach out to BlackRock on this, got a very long statement from them, but what BlackRock says is that they believe greenwashing is a risk to investors and detrimental to the asset management industry's credibility, which is why we strongly support
greenwashing
to set consistent standards and increase transparency for sustainable portfolios. So it sounds like a little bit what you're saying. They also go on to say that they have launched some ETFs that do remove all fossil fuels, which is one example you called out, that some of these funds do still invest in oil companies or other non-sustainable businesses. So what specifics are you pointing to here?
Well, so let me say two things. First of all, BlackRock is not the worst offender in the industry. I would actually tell you that probably we're better than average. The issue is that the entire system doesn't work. And where BlackRock is culpable is that it's promoting a thesis that tells people that these products, whether done correctly or incorrectly, whether they're sloppily made and they include a name that they shouldn't, or the opposite, they're telling people that these things have social impact. And I can't stress enough, there is no evidence that any ESG ETF has any positive social impact that I've seen. There's no evidence that by buying a low carbon ETF, you are actually going to lower emissions. There is evidence that fixing the rules of society through government regulation actually can do that. We're doing it.
Okay. All right. So we kind of got some arguments here going into potential government regulation. I think that we can get pretty political pretty fast there on this. So maybe we kind of walked into something too political here. Political, not politico. What's wrong with the 20? Okay, so we got a tiny little bit of tick back up over here. Somebody says, look at the 20-year. What's I mean, oftentimes these track each other, but not always. We could look at the 20-year bond too. Why not? Okay, let's go to this one. And can we get a line chart? Yeah, here we go. Oh, that's okay. That's very interesting. So thank you for this in the course here. I will explain that in just a second. So 10-year, yeah, just a nice consistent growth really since the 19th. And by the way, this mortgage rates tend to track this. Okay. Okay, so what do we got here? So let's go. Oh, yeah, here. So, okay, let's talk about that for a moment. Greenwashing. Somebody copy and pasted this from Investopedia. Greenwashing is the process of conveying a false impression or providing misleading information on how a company's products are more environmentally sound. Greenwashing is considered an unsubstantiated claim to deceive customers into believing that a company's products are environmentally friendly. You hear this all the time. And I mean, like, I'm not saying that this is not environmentally good, but of course companies do that to give the impression that they care about the environment. Like, and again, not to be jaded, but just saying, when Delta Airlines says, hey, we're going to pay $4 or $5 for a gallon of fuel that usually costs us $1.30 because it's biofuel, and we've got 100 flights out of, I don't know, 10,000 flights a year or more probably that are now on biofuels. We're sustainable. It's really just marketing if you think about it. It's just clever marketing. So ADA, we checked them on Bloomberg yesterday and we didn't see anything on ADA. Like somebody said the same thing yesterday that ADA was on here, and we just get the Australian dollar. So and not trying to back on Gevo, okay? But yeah, Gevo is a biofuels company, and they provide that, and it's expensive. They haven't gotten the costs down yet. They're at $9.27 right now. I was looking at this company at $5, and for me, I'm like, I don't believe in this company. I'm not interested in it. And again, it's not a diss on the company. I believe in their long-run mission. Let me clarify that. I believe in the company long-term, but I'm not going to invest in them in the 2020s probably. Just my opinion. And again, that's not to say you shouldn't hold it, right? I just want to own some stuff that we're going to start really seeing a realization of change from this decade. To me, I put Gevo in the hydrogen play. And maybe that's wrong. I just want to see the costs come down. If they could get the biofuel costs come down, I am game for Gevo. I'd be all over Gevo. But we got to get those costs down. So if you own Gevo, just know what you want to pay attention to is you want to see a rapid decline of the costs of biofuels for both production purposes and other. So hold on, give me 1 second here. Okay. All right, so let's see here. Let's go see if we've got the, see if we can get Bloomberg TV up here. Oh, yep, we got him right here. Here we go. Okay, what are they saying?
Shift in policy announcements tomorrow. We kind of know what we're going to get. All right, we're going to break it down for you. We're coming back in a minute. This is Bloomberg.
Okay. They all go on commercial at the same time. It's crazy. All of them. CNBC, Fox, they all go on commercial at the same time. Like they purposefully do this so you can't channel flip between the three. It's crazy, but that's okay. We got things to talk about as well, like being 13 minutes away from the closing bell. All right, so someone says Riot. What's Riot doing? Riot blockchain. Down about 10% here. Yeah, I mean, we got a lot of this U-turn happening here in the day. They did also bounce off those lows. So from we had sort of this when we opened the live stream, we went live right around here, at 248, 49, something like this. That's right when we had our bounce, right at that moment there. And here we go. So, but anyway, yeah. So we've got to bounce off that, but now we're potentially trending down a little bit again here at Riot. What's CCIV doing? Let's see. CCIV trending up. See, look, nice rally here into the close. Potentially getting a little bit of a rally into the close again. I like seeing that. That's good. This whole bond thing, I still strongly believe it's overblown. And we can really see this pent-up pressure of stocks wanting to go up higher, but they keep getting lidded by these occasional spikes that we're seeing in the yields. That's nuts. Roblox, I think this will be a record close for Roblox. Let's see here. The highest, oh no, we got to 78. Okay, so we're not at record highs, but we're pretty, I think that could have even been today that we hit 78. 70, oh yeah, yep, it was today. It was today we hit 78. Wow. So Roblox will be coming into a record close here. And not an all-time intraday high, but the record close. Churchill Capital trying to break out of the box again a little bit here. Yeah, GHVI is pooping. Yeah, no kidding. It's somewhere down here. Let's see, here it is. And why, right? I think that's the big question we all ask ourselves, like, why? Oh, probably just because it's a SPAC. And had an okay morning, and then straight down. It creates buying opportunities. I'm not selling a dime of that one. That one's a great stock. Definitely not selling a dime. All right, let's listen to this intro here.
Commercial-free coverage of all the action going into the close. CNBC senior markets commentator Mike Santoli here to break down these crucial moments of the trading day, as always. And today we've got Virtu's investment partner, chief market strategist Joe Terranova back as well.
Okay, I guess we don't really care about the intros. We want the data. What do they think is happening?
Basically flat. You've got groups like communication services, technology, staples, utilities, and real estate all in the lead, Mike. Those are all sort of the low yield plays. Energy, industrials, and financials, which had been working all year, they're at the bottom of the pack today. What does the action tell you?
Yeah, it's defensive. And I think this is just, the pendulum has swung back and forth. And the decline in Treasury yields this morning did open the way for this little defensive trade. Big tech is defensive. FANG is defensive. NASDAQ 100 is defensive. What's not is the ARC complex, which is down today, cloud stocks, which are down today. So that's your nuance there that,
Somebody's asking if I could do a video about transferring from Coinbase to BlockFi. I don't do that because I don't recommend buying on Coinbase because it was more expensive. I did a video comparing BlockFi, Robinhood, and Coinbase, and you should watch it. Go type into YouTube, meet Kevin, the best way to buy crypto.
Well, I think it's very consequential. I agree with Mike's analysis overall in the market. The S&P is trying for its second consecutive day to close higher. I like what we're seeing here, where the established growth is actually acting very resilient. Mike mentioned those mega cap names. I would also add to that, the semis are trading very well here today. So I like what we're seeing. I think market is getting a little bit more comfortable with a rise in yields on economic optimism. But tomorrow is absolutely consequential. We need to hear from Chairman Powell. What is he going to do as it relates to a taper timeline? That is critical. Is he going to push back against inflation? Because clearly the momentum is in place for Treasury yields to rise towards 1.92. That's where they began 2020.
Shares of Palantir lower today, but the data software company has been under scrutiny long before its public debut back in September, with questions surrounding the company's secret.
Yeah, I mean, he's very right about, hold on, what's he saying about Palantir?
Speculation and short-termism.
We're in this for the long haul. If you are speculating or you are, or you're thinking about the short term, there are plenty of other things to invest in. We're building the company we believe in. We're going to do it for the long haul. There'll be ups and downs. My lawyers won't let me say more than that, but it's obvious. And if you want something else, it's a huge world. Buy some other stock. Yeah. You don't have to buy Palantir. No one's forcing you. We're completely liquid.
Good for him.
Something else.
Joe, if we do get rates up to 1.92 on the 10 years you suggested, can stocks like this that have done unbelievably well over the last 6 to 12 months continue to rally? Do we go into a world where valuations get pressured, or in fact, does the growth and momentum names perform regardless?
Well, first of all, that was a fascinating interview. Great job by you. Unfortunately for Palantir, it is pulling back here, and the fundamentals really will not crystallize if we're going to see a rise in yields point towards 1.9%. Why? Because long duration assets will remain vulnerable in that environment. I would have liked to have heard.
Well, it'll just take longer.
Palantir about how we're making the pivot here towards the commercial platform, the Foundry platform, versus where we know all the revenue is derived with the Gotham government platform. That's where your 40% growth is going to come from. So I want to buy Palantir. I believe in the model. I like it, but I need to know that I've got more visibility on a little bit of diversification of the platform. And to your point, Wilf, that it's not going to see this vulnerability towards momentum stocks being pared back here and a further rise in yields.
Investing in travel stocks may not be.
All right, we're going to pause on that. So, yeah, tomorrow's going to be a big day for Jerome. And maybe Jerome will have a change of heart, because Jerome's been, he's been a tough cookie. The last interview was really tough, and it left the market very concerned that Jerome is just not on the side of the markets anymore. Jerome is now on the side of basically wanting to make inflation happen so they can prove their strategies correct. So we'll see what happens. We've got some stocks rallying now into the close. We've got Churchill Capital going back to 9%. Let's go. Going back to 10% up. Let's see if we can go back to where we were earlier today. We did have a temporary sell-off about 20 minutes ago. Maybe a little bit more than 20 minutes ago at this point. Actually, probably more like 50 minutes ago. But same thing. When you have coffee, hey, 20 minutes feels like 50 minutes. Anywho. So we've got Churchill potentially rallying into the close. We do have Churchill Capital, CCIV, and Peter Rawlinson will be discussing with Jim Cramer the future of Lucid later today. I do plan to bring that to you live. When it happens, we might just have Mad Money up and watch it, or the parts that we care about. We could just talk about stuff and other times. But anywho, it is possible that there's going to be some rally about this. We did see Churchill Capital go from about 10 to 11% to somewhere around 13, almost 14% up after the mention that Churchill Capital would be on CNBC. Now, obviously, we have seen a little bit of a pullback here. But look at what's running hard here. This is... we've got Moderna really running hard here. They're starting their pediatric studies, but I'm shocked that we're seeing this kind of parabolic movement right here in the stock. A lot of volume coming in, lots of buys coming in right now on Moderna for some reason. Look at this. Moderna's just getting ready to explode, it feels like. We do have pre-orders sold out on CCAV. Really? No. I don't know about that. Let's see. Lucid Motors. Okay, well, we'll discover this together, okay? Let's see here. Discover. It still says reserve now. Reserve. Get this one. Reserve with credit card. Looks like I just have to put in my information. I don't see that they're sold out, given that I could still put my stuff in here. So we could go to, I don't know, stay updated, any kind of news over here. Yeah, I don't see a potential sellout here. So if you saw that anywhere, let me know. Sort of stories here. No, a note from the CEO. No, not seeing anything about that. Okay, let's go back to the sticks. That's the sticks. Okay, it says almost sold out. Where does it say that? You got played, Kevin says someone. Maybe. It's happened before. So, all right, what else do we have here? Okay, Churchill Capital, 9% now. Definitely rallying into the close. Again, does not surprise me with that CNBC talk coming up. What's losing here? We've got just 2.5 minutes left to the close over here. We've also got, what was our SPAC today? SPAC today of FTCV up 43.6% today. Absolutely incredible. We got Churchill Capital up a 9.2%. Moderna up 9%. Roblox rallying. Here we go. Per Seeking Alpha. Oh, Seeking Alpha reported that? I can check later. Yeah. I don't know about that. So, I mean, anybody can make a Seeking Alpha article. It's whether you get views or not. It's a little bit like YouTube. Although I do think they have some more screening. I mean, so maybe not literally everybody can post, but many different opinions get shared, which is actually a good thing. It's one of the reasons I like Seeking Alpha. So Matterport, look at that 9% sell-off. If this goes under 15 here, I mean, this is going to get tempting to where I might want to start nibbling on it again. I mean, we last nibbled on it at like 12 because the market had sold off so much. So sometimes to me, these are just gifts. Look, if you like Gevo, buy it. We've got some nice red here. just be careful. I think there's going to be a lot of this selling off here. I mean, this 4% off on Tesla, it's because people are nervous about Jerome Powell. And I mean, I'm like 60% thinking he's going to be, his usual bullish self. Same kind of statements we've seen in the past. Like, we don't expect inflation. We're going to keep things consistent until we see any concerning signs of persistent inflation. And if we see that, we have the tools to act, and we'll put those tools away when we don't need them anymore. It's almost always the same thing. So anyway, 1 minute to the closing bell, which is incredible. Let's go ahead and pull up CNBC and the closing bell. See what we get over here. We'll see how things closed. We'll review in just a moment.
Negative.
Look at that. Ford is down 5%, or was that over a period of time?
1%, as is financials. Those three recent.
No, yeah, Ford's down 5%.
Day. 10-year yield just pulling back again to be 1.608 at the close. The 30-year is higher, fractionally 237 on the day. Oil slightly lower, gold slightly higher. At the bell, Sarah, we are down 0.1% on the S&P, a third of 1% for the Dow, and the Nasdaq Composite holding on to 10 basis
Hit the music.
points of gains.
Bad timing.
NASDAQ only one there to close
There it is.
in the green. Welcome back, everyone, to Closing Bell. I'm Sarah Eisen, along with Wilford Frost and Mike Santoli, CNBC Senior Markets Commentator. Take a look at how we finished up the day on Wall Street. The Dow closed down 128 points. Looked like we were recovering through the final hour of trade and then dipped lower there in the end of the day, breaking the winning streak we had. We're coming off of 7 straight up days for the Dow. So taking a pause today, down 0.4%. S&P 500 closing lower, a little less than that, because you did have strength in the S&P in groups like technology and communication services. Those were the top performers. Weakness, though, in energy, industrials, financials, consumer discretionary helped lead the index down. Earlier, just after the open, we hit an intraday record high on the S&P, but couldn't hold that momentum throughout the day. The NASDAQ closed positive, which speaks to the gains we saw in sectors like the chip stocks. Moderna had a very good day, 8.6% after announcing trials for young kids. Software starts, big cap technology.
All right, let's go ahead and look at the sticks ourselves. Keep in mind, I have just briefly, just for the stimulus check period, I have by popular request and vote on Twitter, I have extended the 38% off bundle coupon code just for a couple days while we get some stimulus checks coming in, because I got like 50 or 100 emails from people who are like, Kevin, please wait until the 17th, wait until the 19th. And that's all coming up here around the corner. So anyway, let's go ahead and see how did things close today. Right after I do a quick little note here. This is the Seeking Alpha that's being talked about. So this was released, it looks like a couple hours ago, about 2.5 hours ago. Lucid Motors says in an email that the Lucid Air Dream Edition is almost fully reserved. Lucid is requiring a $7,500 down payment on the $169,500 car. The electric vehicle startup says the Lucid Air Dream Edition has a maximum horsepower of up to 1080 and can go from 0 to 60 in 2.5 seconds and hit a quarter mile in under 10. Lucid is hoping to bring the EVs to the market in the second half of the year. Yeah. All right. So that is interesting. So let's go ahead and I'm going to pull up the Bloomberg terminal here really quickly because we do have some earnings today. I'm going to also pull up what we've got in terms of earnings. I'm pretty sure we've got Fuel Cell was this morning. So we have CrowdStrike, I believe, is today. Yep, CrowdStrike is today. Lennar is today. Okay. Oh, this should be fun. We've got some earnings to take a peek at. So we got CrowdStrike up already. Let's go Lennar stock. We're going to pull this up as well. And we're going to see these earnings as they come in. What else is reporting today? Let's see. We have... okay. Just taking a peek at the other Ring Energy here. Cogen. Let's see. City Trends. Okay. Vaxinex, Advanced Solutions, Eastman Kodak. Kodak is reporting. Kodak! Is MP actually reporting today? Kodak, yeah, there we go. Almost had the ticker right. All right. So let's see what we get. Okay, so we've got CrowdStrike up. We've got Lennar up. We've got Kodak up. SRGA, I have no idea who that is, but since you're here, I'll do it for you. All right, we'll pull them up. Come on, Kodak. Great. There we go. Okay, so whatever this company is, they reported a loss per share of $1.28. They lost 22 cents with an estimate that they would lose 15 cents. So that is a greater loss than expected. That's almost 50% more on a percent basis, but that sounds a lot larger than it really is. It's pennies we're talking about, right? But that is SRGA. Let's see here, and they are SRGA. They're about down 2% after hours. We also have I'm not sure which company this is, but they're talking about it over here. I've seen this. I saw this as well.
The
Coupa?
idea that there's asymmetry in the reaction function right now.
Oh, no. They're talking about the bond yields. Okay, they just had a little banner come up about the other one, but I don't know what the other one is anyway. We really want to see CrowdStrike. That's going to be big, as well as Lennar, because that'll affect other stocks as well in these sectors, SolarWinds and some of the others. Okay, so in the meantime, while we wait for these earnings to come through, look at how things closed here. Churchill up 8.5%, Moderna up 8.6%, Roblox 6.8%, GoPro up 4.7%, Hydrofarm, Bitcoin's up again, over 5,300 again. Crowd came in, somebody says. Let's see. Oh, here it comes. Okay, revenue of 264 beat over expectations of 250. That gives us about a $14.4 million beat. We had adjusted earnings per share of 13 cents with 9 cents expected. It's a small beat, but it is a beat. Will be interesting to see what their guidance looks like. But so far, the market in after hours is reacting with a positive about 2%. So we're up about 2.5% now at CrowdStrike. Slight beat here. What else? Revenue Q1 growth from a projection of 267.7, an older projection. The company now sees Q1 revenues that will come in, or hope to come in, between 287 and 292. So overall, that looks pretty good for CrowdStrike. CrowdStrike barely up 1% right now. Possibly that revenue guidance isn't as like sexy as we were expecting it to be. So yes, we can check this out. What is this one? Coupa? Coupa. I have no idea what it is, but that don't matter. It's a set of numbers. How's that? All right. I don't see it. An early lockup expiration will release 34 million shares on March 18th. Oh, that can't be good. Well, here we go. Okay. Wait. Sorry. We just got some more from CrowdStrike. Okay. Q1 EPS of 5 cents to 6 cents, which puts them quarterly a little bit. That's a little bit above. That puts them quarterly right around a quarter to a fifth of a dollar. They're at 196. Gosh, that puts them out like 400 times or something like that earnings. That's crazy on an annualized basis. Yeah. Okay. Hey, CrowdStrike sound a little rich here, but let's see what Lennar does. Okay. Home builders are notoriously cheap, but then again, they're also not able to leverage with the software as a services, right? Let's see here. Did I? Yeah. I didn't even. Okay. That is. You're right. Sorry. The lockup was regarding coupon here, not the other one. Thank you for clarifying that. Where's the Coupa? Here it is. Coupa. Coop is the ticker symbol. So I have no idea. I don't know anything about this one. Let's look at the news on this one. So, okay, here we go. So this one's earnings came in. We've got a whole load of things here. Let's launch this one in the Launchpad. And then what we'll do is we'll look at Lennar, because Lennar should be coming in momentarily as well. So here are the earnings. We have Coupa Software surges 10% as revenue forecast beats estimate. We've got, what do we get here? We got a 675 to 678 2022 revenue, which is right along expectations, but Q4 beat 163.5, which was greater than the estimate of So let's see here. Don't see the quarter four. Here we go. 146 was the estimate for quarter four. So nice beat here. And they had earnings of 17 cents per share versus a loss of 11 cents. So they actually went from expecting a loss to being profitable on the quarter. That's a pretty big moment here for this stock. Let's see. That stock ticker symbol is COOP. There we go. Yeah, it's up 9%. Totally makes sense. Totally makes sense. All right, what do we got here on the earnings alert?
The company posted EPS of 17 cents a share. Coupa,
we just beat them to it.
Business spend management software. That's helping companies manage their supply chain and their inventory. Their Q1 guidance a bit mixed, but the full year guidance was very strong, and you're seeing the result right now. Again, shares up over 8% in after hours trading. Back over to you.
Yeah.
Frank, thanks. CrowdStrike earnings also out. Let's go to Josh Lipton with those numbers. Josh.
Sarah, CrowdStrike reporting Q4 results here. 13 cents earnings per share. That's a beat. Street was at 8 cents. Revenue also a beat. 264.9 million. Street was at 250.4 million. For Q1, they say they're looking for between 5 and 6 cents on the bottom. Street was at 4 cents. They are well above on the top line in their Q1 guidance, calling for between 287.8 and 292.
Well, I didn't think that was well above.
Here, they're basically in line on the bottom, but again, well above the top in terms of expectations.
Yeah, I mean, their estimation was 267. I don't think their guidance is substantially above. I mean, maybe 10%. I mean, that's nice, I guess.
Our expanding tech portfolio, he goes on to say, we believe we are in an ideal position to further extend our leadership in the security cloud category that we pioneered. Remember, heading into this print, the stock had come under some recent pressure. It's down about 10% so far in March, but let's keep that in perspective, up about 500% in the past 12 months. Back to you all.
Josh Lipton. Josh, thank you. And don't miss Jim Cramer's exclusive interview with CrowdStrike CEO to talk about the quarter tonight on Mad Money. Mike, a pair of
We'll get to watch both of those, Mad Money and Peter Rawlinson.
7%. And to Josh's point, for a name like a CrowdStrike, it had gotten caught up in the sell-off and the concerns about valuations after it had been a big winner.
Yeah, I was going to say it's a little bit of a test for whether there's still the nerve to get aggressive in some of these very high value names that did get caught up in the big sell-off, and they still have a lot of ground to make up. The highs were in both cases back in mid-February.
We will have to leave the conversation there. Joe, Michelle, thank you both very much for joining us.
Thank you.
So to come, NYU finance professor.
So we're waiting for Lennar. And after we get Lennar, okay, well, maybe before we get Lennar, let's go ahead and look at the sticks here. I'm pretty sure Lennar is today. Let me see if they're confirmed for today. Lennar? Oh, they're not actually releasing their earnings until 5 p.m. Eastern. That's weird. Okay. Well, that'll do it. So we're not going to see Lennar, but what we can see is what the heck is going on in the after hours here. So let's figure this out. After hours, both Coupa and CrowdStrike doing very well, though Coupa is falling now. CrowdStrike is actually still rallying. Wow. Let's see here. We got Dave & Buster's, Trivago, Riot. Nice push there on Riot. NGA with a 6% sell-off today did fall below 20 again. We've got ARK K down about 2% in the during the day, and up about 0.25% in after hours. We got EXPI here, about flat in the day and after hours. XPeng up about 1.3%. We've sorted by alphabetics here, so it gets a little tricky there. There we go. Let's just sort by losers. Desktop Metal down another 8%. Gevo 7%. GameStop ends about 6% down and still selling off a little bit into the after hours here, falling another about 1% into the after hours. We have, let's see, Funko Palantir, my goodness, back under $26 a share. Wayfair, still a little pricey over here, so Square. But Square's getting, Square's a little decent. Gosh, they were at 200 for like a hot minute. It was definitely a hot minute. So this says Coup has fallen again. We'll take a peek at that. Where is it? Take a quick peek here. No, not that. Coup. There we go. Yeah, definitely it's continuing that trend down. Okay, continuing on Plug Power, Shift, these guys all 8%, barely up in the after hours. I mean, the pain is here to stay. I mean, look at these big numbers compared to these little numbers over here. There's some major differences right now. Palantir is on sale. Yeah, no kidding. Okay, let's look at the after hours runs. So after hours, you got Express, Cloudflare, CRISPR Therapeutics, GameStop, Tattooed Chef, all selling off. Lemonade. Excuse me. Etsy, Canoe. These guys all down about 1% in the after hours here, with really the risers only being the ones that either have earnings coming up. Wait, hold on. We don't know that SOS has earnings coming up. Where's Sundial? Sundial up about 0.6% in the after hours here, but still off 6% in the day. And Sundial started doing well earlier, so it's just incredible. So, okay. What else? Okay, going to all stocks over here. Roblox down a little bit in the after hours, but still incredibly powerful here. Big moves. Okay, let's take a peek over here. Let's listen to this inflation risk.
But it depends on why rates rise. It could be because of inflation, which is much more deadly than I think a growth in the economy.
You're always asked about Tesla as the dean of valuation. We need to know what the professor thinks about the valuation of Tesla now at 676. It's certainly come off the highs. It had a pretty steep sell-off, and I know you've been in and out of the stock. Yeah. What do you make of it now?
Well, I'm sorry I sold so early, but at the same time, I think the stock is on a momentum ride that's been unmatched, I think, in market history. But I think it's time to give back some of those gains, and I think there'll be some consolidation. I think with Tesla, it's always you get 5 steps forward and then 2 steps back, but you look back and it's always net 3 steps. So I think that at 676, I still think it's too richly priced. But what do I know? The stock went up to 900.
In terms of rates and their impact on different types of stocks, are you confident that rising rates will hit more broadly, maybe Tesla aside, some of those more richly valued momentum names? Or is it possible for the next decade we see growth and momentum outperform once again?
I think in general, when rates go up, growth companies feel the pain a little more than mature companies for a simple reason. Their earnings and cash flows are way out in the future, and higher rates make them less valuable. That's always been true. But if you add to that the fact that growth stocks have had a tremendous decade, I mean, you're looking.
All right, let's go ahead and pull back here. So Lennar not reporting for about another hour here. We will have that live stream of Mad Money in about an hour and a half, where we'll get to see what happens with the CEO of both CrowdStrike and Lucid coming on to Jim Cramer. So we'll get to watch that. That'll be fun. Let's see what else we have here. Okay, so we'll go to top news in a second. I suppose let's finish this person's train of thought here on Tesla here.
Do you see that as frothy?
I think that depends on what the overall market does. If you're getting an overall market it's not dropping, it's up 3% or 5%, the IPOs and the SPACs will continue, even if growth stocks are not doing as well as they used to. But if you get a pullback on the market, then I think you're going to get a re-examination of these growth stocks. So I think that's what's going to drive the reception you're going to get for growth stocks and for IPOs and SPACs going forward.
What do you think of the traditionally negatively correlated assets to equities in the year ahead? I mean, it seems like bonds aren't going to be rising in price, even if we see a bit of a pullback in stocks, given what we've been talking about. Are there any other assets that are going to act as good protection in the year ahead?
Bitcoin.
The question I was going to ask is what negatively correlated assets? I mean, last year, in fact, I looked at the correlation across every conceivable asset class. There wasn't a single asset class that was negatively correlated with stocks. Gold had the lowest correlation, but was still positive.
In other words, everything goes with the stock market.
So there's really no place to hide. If you think financial assets are overvalued, there's really no place to park your money right now. And that's a reality we face as investors. And I think, when we securitized every single real asset on the face of the earth, we kind of, got what we wanted, which is everything moves together.
That's a good point.
What about Bitcoin? Have you taken that up as
there you go
a valuation
case
study? And
Sarah coming in with the question.
It's a pricing.
You've spoken before, said it's speculative. But what do you think now?
It's a pricing case study, not a valuation, because whether Bitcoin is a currency or a collectible, it cannot be valued. It can be priced. And the question we can ask is $50,000 or $60,000 a fair price for Bitcoin? From my perspective, I don't see it as a fair price. Why? It's not a very good currency. It's not used very much. And as a collectible, it's gone up a lot, but it's not gone up at the right times. In fact, last year when stocks were collapsing, Bitcoin went down even more.
Yeah, longest streak on my stock diet. That's true.
So based on what it's done so far, I don't see why people are so upbeat about it. The only pitch I hear for Bitcoin is I've made a lot of money on it. But that's that's not telling me much about why I should be holding Bitcoin in the first place.
Fair.
Well, there are those that say crypto is going to change the world and that the US dollar is going to eventually become more worthless.
And I don't have a problem with that, but it has to be a better designed crypto.
She said more worthless, as if it's already some degree of worthless.
And it's really not a crypto that you can use as a currency on a broad basis. So I think there'll be a good cryptocurrency. I just don't see how Bitcoin can be it.
Not a believer. Aswath Damodaran, thank you very much for joining us.
Thank you.
Good to get your take. Up next, Mike Santoli looking at what happened the last time Wall Street was all in on value stocks. You may be surprised by the answer. Plus, homebuilder Lennar said in just a few minutes, the stock has been a big pandemic win.
Yeah, they haven't reported yet. Oh, that was brilliant. Savage Sarah. More worthless. Oh, man. All right. So that's a good one. Let's go take a look at what the top news is here because Lennar has not reported yet. We do have the 10-year up at about just about 1.62 again. So pretty much sitting at its highs. Let's go to top. Not the ultimate highs of like 163 recently. Anyway, stocks snap 5-day winning streak as oil declines. Biden wants higher company tax relief and relief for families making $110K. Got it. Citi asks deals makers to send business to private bank colleagues. Okay. Bill Gross says he's short treasuries. Expect 3 to 4% inflation. Yeah, right. I bet you this guy is shorting the market. That 3 to 4%. I don't know about that. Legendary bond investor Bill Gross says he's short treasuries and expects inflation to accelerate 3 to 4% in the coming months, unless he's talking about that year-over-year number. I've talked about the year-over-year number, and I've been talking about it since December, about how we're going to see this temporary high inflation, and it's silliness. It's all it is, the silliness. So anyway, okay, let's see. Gross sees the price pressures picking up amid substantial fiscal stimulus. Okay, significant demand that is stored up. Power that is stored up can be unleashed if the consumers want to go in that direction. Sure, but then the economy moves faster too. Treasury yields have surged. Okay, market's falling. There's Bill Gross. Okay. Inflation's going to 2 to 3%. I don't know about that one. I'll take a screenshot of that though. Okay. Keep going here. Blizzard fires 50 people amid shift away from live events. McConnell warns GOP will retaliate if Democrats end filibuster. Okay. Apple agrees to let Russians pre-install local apps on iPhone. Okay. All right. So nothing like incredibly juicy here. Probably the juiciest is Bill Gross and I'll dive into that a little bit more maybe later. It's kind of just see what his opinion is. But all right. What do we got in the after hours? That's more important right now. Virgin Galactic, 33.2. Let's see here. Scrolling down. Okay, the after hours here. GoPro, GameStop, Social Capital, all red. Tattooed, red. Twilio, Cloudflare, Roblox, red. Lots of red. Churchill Capital, red in the after hours as well. But so far feels relatively stable. Lemonade kind of here in the middle a little bit. We've got Virgin Galactic really just leading right now. But folks, as we've been saying in a lot of the other videos, just be prepared. We've got, we have volatility coming up, and there will be more of this. There will be another dip. We don't know if it's going to be as deep as the one we had Feb 19 to March 8th-ish, but we'll see.
Take the S&P, more or less split it in half, assign companies to either growth or value. But look at the pure value index. S&P 500 pure value, I think about the 100 cheapest stocks statistically based on price to book, price to sales, trailing price to earnings, all of the metrics that people a year ago were saying it's broken, it doesn't work anymore. Well, now it's been flying. And this is from the B of A Global Fund Manager Survey today. How many people think that value will outperform growth from here on out? Well, look at this. It's a record high percentage of managers saying that that's in fact going to be the case. It's obviously chasing
over
this
40%.
trend. And the last time we saw this was about late 2013, was also when yields were rising, the Fed was tapering, we might get an economic acceleration. That was really almost the birth of FANG, and growth did take over from there. I'm not saying that's what we're poised for here. However, there has been a big comeback in a short period of time for value. It might not be as much of an either-or market, although on a 10-year basis, value is still way, way, way behind. So if you believe in mean reversion over the long term, there still are some tailwinds here that could make these managers look right for a while.
I don't.
And Mike,
so you're saying it's getting a little crowded?
It's certainly getting crowded, at least psychologically. Sarah, it's not clear to me that people genuinely have their positioning in the same place as their minds at this point. But I think everyone has bought into the notion that they should be in more cyclical and value stocks. Although what's very interesting is this week, a lot of strategists on the sell side are saying that they're getting a lot of questions is it time to take profits in cyclicals? Is it time to lighten up on the value trade? That suggests that maybe there's not a lot of high conviction behind this trade. It's much more about just making sure you don't get left behind.
But Mike, the other big difference, I guess.
That's actually what I believe, too, is I think people are jumping into value because it's like, oh, well, value is going up, so I should put more money in that, right? No, when value is going up, you should be putting money into the stuff that people are selling out of because that is how you buy the dip. As long as you're buying good quality companies, obviously. Okay, so otherwise the market's pretty stable right now. I will be streaming Jim Cramer in about an hour and a half to see what the CrowdStrike CEO and Peter Rawlinson over at CCIV Lucid have to say, and that'll be really, really exciting. So I'm looking forward to that. In the meantime, have fun out there. Good luck. We'll look at the sticks again later during that Jim Cramer interview. There will be a redirect. So make sure to hit remind. As soon as I end this live stream, hit remind. And then do take advantage of the fact that I've extended this for a couple days just as stimulus checks come in. Use that coupon code HODL for the private live streams where I answer questions directly. Q&A, it's pretty much a consistent thing that we do every day. We do analyses together now, conviction analyses, real estate analyses. It's fun. It's a really good group. But anyway, click that remind button, and folks, we'll see you shortly.